Hello, friends. September is here, and history calls it Wall Street's toughest month. We just wrapped up a surprisingly strong August, only to stumble on Friday with a sharp pullback. Was that just pre holiday profit taking, or the start of something bigger? And here's the real question: will September's bad reputation strike again, or will the bulls surprise everyone this time? In this video, I'll break down what really happened, the key risks ahead, and why the AI trade, led by Nvidia, suddenly hit turbulence. I make sense of the signals that matter. Welcome to Chart Whisperer. So, let's start with last week. We closed August stronger than expected, but Friday's weak close put a damper on things. Volumes were light, but these sharp pullbacks are never fun. September already comes with a cloud of doubt. It's historically shaky, and this time we're heading in with a 3-day holiday weekend plus cautious analyst chatter. Had we finished Friday in the green, momentum into September would have looked much better. Technically, though, the charts aren't flashing red. On Friday, the Nasdaq slipped about 1.15%, and the S&P lost just 0.64%. Volumes were actually even lower than the prior day. That doesn't scream panic. In fact, more than 100 stocks rose on strong volume, compared to 149 that declined. That's more like sector rotation than a broad sell-off. And with traders trimming risk before the long weekend, it makes sense we saw extra selling. Before diving into the charts, I've got something important for you. Starting this week, I'll be posting 4 quick technical analysis videos every week, covering the Dow Jones, Nasdaq, S&P 500, and Russell 2000. These will come out Monday through Thursday, and I'll walk you through key support and resistance levels so you can react fast and adjust your plans. Let's kick things off with the Dow Jones. Last week, we broke through the resistance at 45,077, but on Friday, the index flashed 3 negative divergences. That makes today critical. If those divergences play out, a pullback could be on the table. Still, momentum looks good, MACD is above zero, the trend is intact, and we're holding above all the key moving averages. Watch 45,077 closely. If we see 2 straight closes below it, we'll need to revisit the setup. Next up, the Nasdaq. It recently hit an all-time high at 23,969, but on August 13th, it showed 4 negative divergences, and this time, they actually worked. The index corrected toward the 50-day moving average and bounced. Right now, it's moving sideways, just under the moving averages. MACD is pointing slightly lower, but still above zero, so no sell signal yet. The critical level, 23,686. Now the S&P 500. The all-time high is 6,481, tested for the second time. On Friday, we saw both a negative divergence and a doji candle showing indecision. But remember, MACD is still above zero, so the bigger trend remains up. First support is at 6,138, and we're also watching Fibonacci retracements. A 23% pullback lines up with that support, while a 38.2% retracement would still be perfectly healthy. Finally, the Russell 2000. Resistance at 2,458 has been broken, and that level now acts as support. On Friday, we got another divergence, but here's the key. MACD is turning up, even though it's still below zero. That orange shaded zone we've been tracking is critical. As long as the Russell stays above it, the bullish case is alive. So the bottom line? All 4 indexes remain technically healthy. Divergences are worth watching, but small corrections in a strong uptrend are usually a good thing. For long-term investors, they often signal strength, not weakness.
Now, Nvidia, the poster child of AI, gave stellar guidance, but still sold off Friday, pulling the whole AI theme lower. You could almost say the rally caught the evil eye. Just the day before, AI looked solid, but Friday's drop pushed Nvidia under its 10-day and 21-day moving averages. Normally, I don't overreact to these quick dips. The news flow isn't turning negative. But one strange rumor floated around over the weekend. Did Trump pass away? Now, let's be clear, God forbid. But he hasn't been seen publicly in weeks, and uncertainty at his age spooks markets. Even if it's nothing, that rumor added fuel to the risk narrative. So, what's next? September will be busy. This Friday, the jobs report. Any sudden weakness could be a shock. September 9th, revised employment data. Last time those revisions really shook markets. September 11th, CPI inflation. As long as services inflation stays tame, no major worries. September 17th, the Fed rate decision and Powell's press conference. A 25-point cut looks locked in, but data could shift expectations. September 19th, triple witching. Expect volatility. And let's not forget, just last week the S&P 500 hit a record 6501, up nearly 10% year to date. But September is historically the weakest month of all. Thanks for watching. I hope this gave you some clarity on the markets. Don't forget to like, subscribe, and turn on notifications so you never miss an update. The markets never stop whispering. Make sure you're subscribed so you don't miss it.